Hi everyone, my name is Bassem, and today I'll be giving advice that helped me as a beginner invest in the stock market. If you find these tips helpful, please like the video and subscribe to the channel, and I'll keep these videos coming. Let's get started. First point, start investing as soon as you can. Start investing now. Don't wait until you have a large lump sum or if you have a lot of savings to start. Just keep in mind the returns are long term. So even with $500 or $1,000, get started, and the compounding effect, so years upon years of investing, will hopefully yield a massive result. Next, try to invest frequently, every month or every quarter. Maybe put away 5 to 10% if you can from every paycheck. Don't just let it sit in your bank account. Diversify your portfolio. I like bank stocks, but I can't put all my money into bank stocks. I own some real estate, some utility, some tech stocks. Some are dividend paying, some are not. If you're just getting started and you have $500, it's okay to put all 500 into one stock, but your next 500, your next 1,000, invest in a different stock, a different industry, and we'll see where the results take us. Invest in dividend paying stocks. These are cash payments, either quarterly, monthly, some of them are annually. I'm going to be making an entirely separate video on the power of dividends and why I have around 80% of my portfolio in dividend paying stocks. These are cash payments directly into your account. Even if the stock goes down or your entire portfolio goes down, you would have already received some dividends over the months or the years, enabling you to crystallize some of your gains and also build some savings on the side. You can buy another stock or expand your portfolio altogether. Remember, the stock market is not gambling. With enough research and with enough patience, you can learn enough to build a small portfolio at the beginning and then hopefully grow it into a fixed income or whatever your goals may be. That being said, remember to reinvest your dividends or your capital gains. Don't cash out unless it's absolutely necessary. Don't cash out to buy a car or a purse or a vacation or go shopping. Unless you absolutely need the money, I would recommend, if you make a good gain or return on your dividends or a stock, take that money and reinvest it into the stock market. Buy something else, keep growing. This next point is an important one for everyone. Don't try to time the market. We are not smarter or quicker than the algorithms, the computer algorithms that are automatically buying and selling shares. Being that I'm recording this in 2020, everyone's waiting for a stock market crash. Everyone's talking about a crash. I feel like it's a self-fulfilling prophecy. If you keep talking about it, you keep harping on about it, eventually it's going to happen. I kind of want it to happen so people can finally stop talking about it. A lot of people I know are hoarding cash and not investing in the stock market, waiting for this crash to happen so they can come in at a low price. But how would you know how to time it? How will you know when the stock market has bottomed out and it's time to invest? If you do one of the previous points of advice that I mentioned earlier and invest frequently, you would have taken advantage of the slow decrease in price that happens in a market downturn. So you would have already taken some advantage of some cheaper prices. An example of poorly timing the market where I got this point from is a former boss of mine. In January 2019, he figured the stock market was too high, everything was too expensive. He cashed out his entire portfolio. He was waiting for this crash. He was hoarding cash for the crash. So a year later, nothing has happened. It's now February 2020. The crash hasn't happened. He mentioned to me that his entire portfolio would have been worth 30% more if he had just held it. So now he's been waiting on the sidelines while everyone else has been making money. So remember, we're not smarter than the algorithms. We're not full-time traders or full-time looking and researching into the stock market. Just invest frequently and go along for the ride. Next, markets always tend to overreact. Whether it's good news or bad news, they'll either overshoot the price, causing a sharp downturn later, or they'll oversell, causing a sharp decrease in the price, only for it to slowly come back up. Let's take a look at Tesla. It was $650 one day. The next day it was $780. The day after that, another huge increase. It went up to around $890. You can see this was the overreaction. The day after that, it ended up dropping around 17%. It was overbought. You should try to be selling when everyone else is buying. Just because you saw the stock price had a huge jump and everyone is buying, you shouldn't buy in just yet. There's always an overreaction to good news or bad news. This next point is going to be taking a slight turn just towards Canadians. Don't do any GICs, any locked GICs. These stand for Guaranteed Investment Certificate. Yes, the income is guaranteed, but because it's so safe, the returns are also very poor. I'm saying this strictly because of another colleague of mine who invested $5,000 into a 5-year fixed income GIC at 1% a year. This doesn't even cover inflation, so technically I feel like she's losing money. Also, because it's fixed for 5 years, she locked herself in for 5 years. If she wanted to withdraw before the 5 years is up, there's a cash penalty causing her to lose even more money. Next point, avoid leverage until you're more experienced or until you understand the risks. Leverage or buying on margin means taking out debt, taking out a loan, or buying on margin to invest in the stocks. I would recommend avoiding this until you fully understand the risk, your return, and what you plan on doing. Second last point, I promise. Avoid penny stocks. I've seen a lot of blogs, articles, or even videos from influential people on why you should buy this penny stock and why it'll shoot up. This strategy is called pumping and dumping. They're artificially increasing the price of the stock that they own, this penny stock that they own, so that more people can buy it, they'll sell, and then a few months later, a few years later, when the company doesn't do so well because it was kind of a fake strategy, the stock price tanks. These people have already cashed out a long time ago and everyone else is holding these shares at a huge loss. I recommend sticking to companies with a proven track record, good earnings, good past earnings, good projected earnings, and good projected outlook. We're not angel investors just yet. Last point. This one's important. It's one that I was guilty of, is don't get greedy. I made this mistake with one cannabis stock, Aurora Cannabis. I bought it when it was very cheap and it kept going up and up and I wanted to make more, so I bought more at a much higher price. I was expecting the price to go to the moon and I wanted to go along for the ride. But now, obviously that didn't happen. The cannabis sector has taken a sharp downturn. I'm at an unrealized loss of $4,000. Unrealized because I didn't actually sell, so technically I didn't lose any money, but I'm in a weird situation where I'm holding this at a loss. But I've learned from this mistake and it won't happen again going forward. That's the video, guys. Please remember to like and subscribe so I can keep putting these videos out. If you have any recommendations on any more tips or more advanced tips or any other videos that you like, please let me know. Tune in to my next few videos where I'll be talking about passive income and how to get multiple streams of income. Thanks, guys.